So there's a huge financial deal going down between the United States and Argentina that's making some serious waves. We're talking about a massive amount of money, two countries, and, well, a pretty quiet power play that could change the game in South America.
And the number that's got everyone talking? It's this one, $20 billion. That's the scale of the currency swap we're looking at. And a figure that big, it demands a closer look.
But what is this thing really? You hear a lot of terms thrown around. Is it just a lifeline for an economy that's struggling? A simple financial backstop? Or is there something more going on here? A calculated move in a much bigger global game? That's what we're going to unpack.
Okay, so let's get into it. We're going to walk through what this deal actually is, how it's even possible in the first place, then look at the arguments for and against it, and finally, what's really at stake here for everyone involved.
So, first things first, what actually happened? Well, in October of 2025, Argentina's central bank made a big announcement. They'd signed a currency swap agreement with the U.S. Treasury. The whole point was to give Argentina access to a big pile of U.S. dollars to help get its economy on stable ground.
The whole mechanism is kind of like a financial trust fall. In a currency swap, the U.S. Treasury hands over dollars to Argentina, and in return, it holds on to the equivalent in Argentine pesos. The idea is to flood the market with dollars right away, calm everybody down, and just buy some time for the bigger economic reforms to start working.
Now, you've got to get the numbers straight here because it can be a little confusing. The $20 billion swap, that's confirmed. That's the deal. But you might have also heard this bigger number being thrown around, $40 billion. Well, that larger figure is more of an ambition, right? It's a goal to bring private sector money into the mix too. It is not a done deal. And that's a really important distinction.
So, you might be wondering, how can the U.S. government just commit this kind of cash so fast without some huge, dragged-out fight in Congress? Well, the answer lies in a pretty obscure but incredibly powerful financial tool.
And yeah, that's the question that really gets to the heart of the controversy, isn't it? If we're talking about a multi-billion-dollar risk, shouldn't our elected representatives get to vote on it? Well, legally, it turns out the answer is no. And it's all because of this one special fund with a really fascinating history.
Let me introduce you to the Exchange Stabilization Fund, or the ESF. You can think of it as the Treasury's break glass in case of emergency wallet. It basically gives the Treasury Secretary the power to jump into markets and give credit to other countries without needing to get a new permission slip from Congress every single time. And believe me, this thing has been around the block. The ESF was actually born during the Great Depression. It was used to rescue Mexico back in 1995. It was a huge tool during the 2008 global financial crisis. So while using it for Argentina might feel new, the fund itself has been a pillar of American financial power for decades.
Okay, so we've covered the what and the how. Now, let's talk about the why. Why would the U.S. take this kind of risk at all? Well, the people who support this deal, they lay out a very clear case. And it goes way beyond just dollars and cents.
They basically see it as a three-part strategy. First, you stabilize a major partner in South America. That's good for everyone. Second, you make sure Argentina stays firmly anchored inside the U.S. dollar-based financial system. And third, and this might be the biggest piece, you make a really strategic move on the global chessboard.
And this is where it gets really interesting. This isn't just about pesos. Supporters will tell you this is a direct shot across the bow at China's growing financial influence in Latin America. And check out that last point, resources. Argentina is right in the middle of the lithium triangle. And you know what lithium is for? It's the key ingredient for all the batteries powering our electric future. This is about securing those critical supply chains.
But of course, not everybody is on board with this. For every argument in favor of the deal, there are critics raising some very serious, very legitimate red flags about all the risks involved.
Their worries also kind of fall into three main buckets. They're definitely not happy about the lack of direct congressional oversight on a deal this big. They are worried about the very real financial risk to you and me, the U.S. taxpayers, and they're pointing to the potential for something economists love to talk about called moral hazard.
So let's break those risks down. Bypassing Congress? Okay, it's legal, but it makes a lot of people nervous about transparency. The financial risk is pretty simple. If Argentina's peso keeps sinking, the U.S. could actually lose money on the deal. And moral hazard? Well, that's the fear that all the private investors could make a fortune if things go well, knowing that if it all goes south, it's the U.S. taxpayer who's left holding the bag.
So when you put it all together, what you're looking at isn't just a simple transaction.
It's a really high-stakes gamble with absolutely massive potential outcomes, both good and bad.
I mean, the story here can really only end in one of two ways. In the success story, this swap is the bridge Argentina needs. The economy stabilizes, the reforms actually work, the loan gets paid back, and America's strategic goals are achieved. But in the failure scenario, well, the reforms fizzle out, the currency crashes even further, and the U.S. is stuck with big financial losses and a huge political headache.
This quote right here, it really nails the core of the pro-deal argument. It reframes that $20 billion. It's not a cost, it's an investment in American influence and economic security. It's all about playing the long game.
So here's the bottom line. This whole Argentina swap thing, it isn't just about Argentina. It's a really clear signal that in today's world, finance is statecraft. It's about using the power of the dollar to compete for influence, for resources, and for allies in a world that is changing incredibly fast.
Which really just leaves us with this one fundamental question. In an era where our economic security and our national security are totally tangled together, how do we decide when a multi-billion-dollar risk is a smart strategic investment and when it's just a reckless gamble? The answer to that question is going to determine a lot more than the fate of just this one deal.